Yo guys, welcome back to this brand new video. Today I will be making a video about earnings of e.l.f. Beauty. It's one of my positions I have. At this moment I have 15 pieces of it, so 15 stocks of e.l.f. Beauty. Now the price dropped a lot since earnings, so we will dive right into it why that is. And I plan on buying more. So that's what I'm at today with e.l.f. Beauty, so let's go right into it. We're looking at e.l.f. Beauty's Q2 2025 earnings, a quarter with huge revenue growth, strong brand momentum and rising global presence. But despite that, the stock took a hit. Why? Let's break down what the market missed and why I still see big upside in this beauty powerhouse. So let's start with headline numbers. e.l.f. Beauty reported $301.1 million in net sales, up 40% year over year. Even more impressive, international sales jumped 91% up, yes, almost doubling outside the US. So that's pretty big. Gross margin improved 40 basis points, adjusted EBITDA was $69.3 million, and adjusted EPS came in at 77 cents. That's a very healthy quarter by almost any standard. And this marks their 23rd consecutive quarter of net sales and market share growth. So that's nearly 6 years of non-stop expansion. That means that they have been growing 6 years non-stop. So with results like that, why did stock drop 11% post-earnings? Simple margins. The company simply because of margins. The company warned of tariff headwinds, so that will hit profitability in the first half of fiscal 2026. They're expecting adjusted EBITDA margin to dip from 23% to around 20%. Even though they're raising prices and shifting production away from China, the market doesn't like uncertainty, especially when it impacts future margins. But let's keep it real, that doesn't undo the core strength of the business. e.l.f. raised full year guidance. They now expect 28% to 30% of revenue growth for full year 2025 and adjusted EBITDA between $204 and $308 million. That's up from prior forecasts. But here's the thing, just like with AMD, I wouldn't be shocked if e.l.f. is sandbagging and bit here. So they're cautious because of macro pressure, but if tariff risks stabilize and global growth continues, they could easily outperform this new guidance, especially with how they're diversifying their supply chain and scaling internationally. US demand remains strong, but what was really exciting is international sales outside of the US. They are exploding up to 91% year over year. That's a signal that e.l.f. is becoming a truly global brand, not just a domestic production or disruptor. Also, a big new thing is the Rhode acquisition. The skincare brand, co-founded by Hailey Bieber, is also an important strategic play. It brings cultural capital and younger demographic and another growth lever, and they are now able to make an income source of higher priced products. So of course we have to talk about tariff risks. Higher import taxes on China-made goods are expected to weigh on margins, but management is already taking action, raising prices, moving production and optimizing logistics. In other words, they're managing it proactively, not reacting after the fact. That's what you want from a long-term growth company. Let's zoom it out. This company has grown revenue at 35% annually for years now, is profitable, brand awareness is climbing, and it's gaining shelf space, all while being debt light and operational lean. And no, it doesn't need to become L'Oreal or Estee Lauder overnight. If e.l.f. just keeps executing on its core strength, affordable, high quality beauty for Gen Z and millennials, it's already in a category of its own. In fact, the current dip may turn out to be a buying opportunity for long-term investors. Also, if we look at 3 years, it's pretty much down in health. So yeah, I do think it's a nice buying opportunity. Who believe in strong brand-led growth even under short-term macro pressure. So e.l.f. Beauty had another killer quarter on the top line, but margin warnings scare the market. And this is actually also what the problem was with AMD. It is and will always be a margin problem if you talk about the macro data, following up with tariffs and all of those border controls. So yeah. I do think, again, e.l.f. Beauty had another killer quarter. Personally, I think the Rhode is still fully intact, and this might be kind of a dip, rewards patience. So let me know what you think in the comments. Subscribe for more if you like this content and this type of content, and I'll see you guys next.